In this video, I'm going to walk you through how to make $1,000 a month using futures options and sector rotation. Most people don't know what that is and they're actually missing out. This is something that I think about and analyze a lot, but I don't talk about a lot. So this is going to be a very in-depth video. What we're talking about here is in order to get an option strategy to work well, you not only need a good strategy, meaning that it's been back tested and it's been proven with real money and it has a set of rules you can follow every single time, but you need to do it in the right market. And now I talk about trends when I talk about the right market a lot, but what I'm also looking at is sector rotation. And so if you don't know what sector rotation is, there's a ton of deep, in-depth financial articles and white papers written on this, but this is the most basic understanding of it. When the market is in a certain phase, there are certain sectors or areas of the market that perform better. For instance, as you can tell from this chart, when the market is at its bottom, finance and technology sectors tend to do well. When the market is rising and bullish, that's when technology and industrials and basic materials do well. When the market is at the top, that's when energy does well. And when the market's declining, that's when staples and healthcare does well. So there's different sectors of the market. The S&P 500 is actually comprised of 11 different sectors of the market. And so these sectors actually do well during different phases of the market. So instead of just looking at the trend, we can also look at where is the market currently, what phase, and then go to the sector that's performing the hottest. And so that's one way to do it, is by looking at purely the sector rotation chart, being like, okay, the market is this, meaning that these sectors are doing right now. Another way to do it is by going to a sector heat map like this. You can see it shows each different sector. So the technology, the financial, consumer discretionary, healthcare, industrials, and it shows how well they're doing as a whole. And if you want to, for instance, sell puts, be bullish on a sector, find the greenest sector. If you want to be bearish on a sector, find the reddish sector. If you want to do strangles, which is a neutral strategy, find the most neutral sector. And so this way you can target the best sectors in the market. So not only are you setting up the market to be in your favor, but you're setting up the underlying fundamentals of the economy in your favor as well. So this is something that I look at when I'm analyzing specific sectors and specifically specific stocks. And so how does this relate to futures option selling? Super simple. All of these sectors are different type of futures that can be traded. The overall market is going to be the ES futures. So we have ES for the overall market. If we're trading something like energy, that would be NG for natural gas. If we're trading more of a metal, that could be something like GC for gold or SI for silver. And if we're trading something like, let's say bonds or something for governmental, again, that's going to be a ZZ, sorry. And there's a lot of different sectors that we can take advantage of from this. Also energy being something like crude oil, something like that. And so now when the market is in different phases, us as futures option sellers, we can then adjust to what futures we're doing based on what market is hot. Now remember, in order to be successful, you need to have the right strategy plus the right market. And so as long as you're aligning a quality strategy, for instance, the 111 strategy, the short put strategy, something like that, and you're aligning it with a good market, like a good sector, a good trend, that's how you leverage returns. And not only that, if you have a good form of executing on the strategy, so a written game plan with entry rules, exit rules, conditions, or you simply just take that and you plug it in and you automate it instead, either way, you need to have a flawless execution of the system. That's how you make money as an option seller. Now let's dive into a real tangible example so you can see how this actually works. Right now, where are we? Okay, if we're looking at the market, you can see here, we were in an uptrend, we hit a market top, we downtrend, market bottom, now we're pushing back up. So we're in the middle market phase. So what does this tell you about the overall market? If we go to the market chart, you can see here, we're in the early bull market phase, which tells us that the market right now at this time in June is technology, industrials, and basic metals. So if we look at this section, you can see technology, industrials, and basic metals, which again, it's going to be around here. Materials, we don't really have it on this chart. Now you see, those are the strong sectors right now. Those are the ones that are all green. So how do I take advantage of this? I use a bullish strategy, my go-to one, whatever that is. Let's say you have a short put or a 111, and you run it on those sectors. So that's sector technology being the XLK ETF, or being the industrials, which again, we can see here under the sector map. The industrials is XLI, and you can run that strategy on XLI instead. So using these sectors, you can now combine the right strategy to have and put the odds in your favor. That is how you use futures options and sector rotation to make money, to align not only the strategy, but with the market, to make sure you're putting all the odds in your favor for success.